Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is Kelvin Wong, Market Strategist at CMC Markets. Kelvin, as always, great to have you every Thursday.
Hi, my pleasure. Good to see you again, Brian.
Now, Kelvin, before we get your insights and pick your brain, we're going to first take a look at how the crypto markets are performing, and then we're going to take a look at how regional markets have performed this morning. Now, we're going to start with Bitcoin, which is at 56,495.7. It's down 1.03%. Ethereum is at 4,507.45. It's down 4.71%. Now, if we look across to regional stock markets, we're going to start close to home. The SGX is at 3,091.76. It's down 0.21%. If we look across to the KLSC, it's 1,494.04. It's down 0.19%. Shanghai is at 3,576.48. It's down 0.01%. The ASX 200 is at 7,540.8. It's down 0.22%. The Nikkei is at 27,811. It's down 0.42%. The Hang Seng is at 23,698. It is up 0.17%. Rounding up the numbers, we've got the Kospi, which is at just under 1% up at 0.98% at 2,928.25. Kelvin, what's your view on market performance this morning?
Well, I would say that overall it's kind of more towards the negative side because due to this uncertainty that is coming out from the new COVID-19 variant, which is the Omicron variant. So due to this uncertainty, there's a lot of negative feedback loop in the risk asset. So we start to see the US stock indices that actually sold off quite remarkably or significantly yesterday because initially it was up by a few percentage point that it didn't manage to hold up the gain and starts to soar off. And the reason why it sell off over here is because it's related or come out or reinforced by this negative news flows stating that the US CDC has reported a case, a COVID-19 Omicron case in California. So right now, right, a lot of this kind of negative feedback loop is actually created by news flows related from Omicron, which is right now at the moment, unfortunately, there is no way to know that how bad will it be because right now there's a lot of fear that is being surrounded to this particular news flow because of the sketchy information that we're getting out from here.
Now, the Fed also has dominated the thinking of markets because of quantitative easing. Kelvin, what's your
Yes.
view now on the latest Chairman Powell's comments?
Yeah, so in fact, right now, right, what we are seeing right now is finally, Fed Chair Powell he has kind of thrown in the towel, acknowledging that the current state of inflation is no longer temporary or transitory in US. So what it actually means over here is that hey, right now we are actually watching inflation very closely, and we may actually quicken the pace of tempering because right now for sure I mean we can actually forget about QE and QE program. So right now they're actually in the phase of tempering, but towards the end of his testimony, a recent testimony towards the Senate Congress Committee of Banking, if I'm not wrong, he did leave a back door saying that he's still concerned about this negative aspect. That means there could be a potential adverse demand shock coming from the Omicron variant. So he leave a bit of backdoor. So because with that in mind, right, being traders or investors, that we got to be aware or keep a lookout on how this Omicron variant got to evolve. So let's say if it evolved quite drastically, where I mean this is the worst case scenario where global countries we're going to do another global lockdown 2.0. So that could actually kind of keep the Fed kind of negate its current hawkish dovish stand. But definitely,
Okay.
perhaps that could actually, we call it, slow down the pace of QE. But QE is still got to be there, but they're just going to slow it down. But at this moment in time, if everything's all else equal, we still believe that the dollar will still be in a strengthening mode in general in the next 1 month or so against the rest of the G7 currency.
Okay, now I want to take a look at oil markets, Kelvin, because we want to get your insights into why the price action has been rather yo-yo-ish. Just a
Yes.
week ago, we had very bullish and steady over the last few months in terms of $80+ a barrel. Then it's
Correct.
plunged to below 70. What is the reason for this, and what is the underlying demand?
Okay, so if you could see actually the last few, okay, that we talk about the current weakness of this oil price has been more or less seen in the last 2 weeks or so. So these last 2 weeks, right, there's a couple of things that we got to bear in mind. Is number one, there's this ongoing spat that I believe that right now is leading to a bit of a war between US and OPEC. Okay, so what is the story about? Okay, a bit of that to add a bit of color on that, because right now the US administration actually wanted OPEC Plus to actually reduce the price of oil by releasing more supply into the global market. Because
Yes,
don't forget, OPEC Plus, means together with Russia, account for more than 50% of global oil production. So whatever
correct.
they do has a significant impact. So why US administration want to do this is because of next year midterm election. Because right now, based on the ground sentiment, uh, there seems to be a pockets of certain states that are not in favor of Democrats. Because if that's the case, a Democrat means, i.e., Democrats could actually lose the Senate, because right now Senate is still about 50, 51, 50, something like that. So
Correct.
Democrat could lose the seat in Senate. So that could actually be a bit problematic to Biden's administration in pushing out his agenda going forward the next 2 years. So what Biden administration now wants is to score political point by asking OPEC to increase the supply of oil. So eventually that could actually lead to lower inflationary pressure in US via the gas prices in US, because gas prices in US and oil go hand in hand, right? But the problem is always OPEC refused to budge, because the OPEC really believe that they are doing their best for now. Okay, so what US did is that US went against OPEC a decision of not to releasing oil. Hey, you don't release oil. Me and my airlines, so-called the other oil importer or importing countries like India, China, South Korea, UK, to actually release a certain amount of stockpile from their strategic reserve into the market.
Yes.
So that caused the oil to actually come down a fair bit from, I think, about 80 plus 85 per barrel. And on top of that, it's kind of being reinforced by the potential adverse demand shock from Omicron variant. Okay, because of this Omicron variant demand shock over here, so today OPEC were actually made, OPEC Plus were made to decide how much they're going to release in December, means this month's supply. So the initial plan was 400K per barrel per day addition.
Yep.
So given that OPEC has kind of, there's some internal reports that's being leaked out saying that, hey, next year in 2022, there will be a abundance of supply in the market. Okay, so that together with the current Omicron, this potential adverse demand shock that could have on the oil market, OPEC may have a say right now on an excuse to actually be reluctant to increase that 400K per barrel in
Per day.
December,
Yeah. Okay.
or they may just maintain that at a lower amount. So that causes a bit of
Okay.
yo-yo-ness in the oil price. Yeah,
So, Kelvin, could you perhaps show us some technical analysis in terms of
sure,
the
sure.
impact of the oil markets?
Yeah, so definitely a picture paints 1,000 words. Yeah. So okay,
Yes.
what we are seeing right now is a monthly, it's a perpetual chart, a long-term chart on the WTI crude oil future price. So what we could see over here, right, the current fall actually comes back to previous bullish trigger level, which actually led to that prior 25% increase in oil price to hit to
Yes.
the high of 80, 85, 85.41. So right now it's actually resting back at this level again, 66.60. So if I were to go down to the daily chart, so this you could see the amount of the kind of swing yo-yo. So right now it's trying to actually recapture this level back again at this level. So what's interesting over here is that I reckon that today's risk event could be a play, have a significant impact on the price movement of crude oil at least in the short term. So what we could
Okay.
see right now over here is that for sure there's a resistance at 73.95 over here. So what we could see over here is that if price can't goes above 73.75, it could actually be, or if they manage to have a daily close above 66.60, so it will be more like a sideways movement between these two
Okay.
levels. But however, if we start to see a daily close below 66.60, it could take us down towards the long-term key support at 57.25 for the
Okay.
WTI crude oil price. So what happens in OPEC plus later, I do believe that it will have a pivotal impact on at least the short-term price movement of light crude oil,
Now,
WTI crude.
Kelvin, Thank you very much for taking your time to be on the show, and thank you very much for your insights.
Sure, my pleasure, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our various social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.